Welcome to the Money and Wealth Show, brought to you this week by AmericanManganeseInc.com. Here's your host, Sterling Fox.
Welcome to the Money and Wealth Show, the program that offers you opinions every week on business, the economy, and the markets. And this week, it's a real pleasure to welcome back to the program the chief strategist for the energy component of Casey Research. Vancouver's Marin Katusa is back with us. Good to see you again.
Oh, it's a pleasure, Sterling.
Let's get right down to where the rubber meets the road. A lot of us are trying to organize our summers. Some of us might want to even take a bit of a driving vacation. The price of a liter of gas in this country continues to, impede our summer plans. Tell us why gas is at $1.40 or more per liter in almost every corner of our country.
Well, the main reason it's on every newspaper is because it's finally hit the East Coast in Toronto.
Do tell.
So it's hit the center of the universe. But the West Coast has been struggling with this for over 2 months.
Sure.
And the main reason is what they call the crack spread, and they're using the excuse of logistics and the spread of the gas, the commodity.
Well, crack spread is an industry jargon, and it leads to terrible visuals. So I'm thinking plumbers, and I don't want to go there. So what is the crack spread?
Basically, the crack spread is the difference of what it costs to bring it in and the refining difference. And when you look at the last time we were paying $1.40 plus per liter, oil was $150.
Okay.
Well, oil's not trading at $150, but yet we're paying over $1.40 per liter gas.
Yes, yeah.
And that's mainly due because of the input and then the output costs for the refining capabilities on the West Coast.
And as I understand it, the refineries have kind of brought this on us all by themselves by underestimating the demand for gasoline in Canada this year. Their math was off.
That's one of the reasons, but it's also the amount of capacity able to go through, because then you got your spring cleaning, your downtime, and all these other effects.
Okay.
So that's part of the reason. And the price is there, and people are willing to pay it. So the refineries are taking the price.
Well, I suppose, though, where we get really confused, and it's great to have an energy specialist to help clear this stuff up. We know that the price of oil, and you just referenced it, last time this prices at the pump went this crazy was when oil was almost $150 a barrel. It's $50 less, and yet the prices are up there. So we need to remember, or in our minds, when we complain about gasoline prices, that they are completely separate from crude oil prices. They are two different files altogether, aren't they?
Well, especially in this last little while, historically there's a trend that goes, there's a correlation. But this divergence, especially in the last month and a half, is mainly because of the crack spread. What do we expect? We expect eventually to the supply to catch up, because the demand will taper off in the next few months because of the season and the heating capacities. But, you know, what we have to always remember is the speculation in the market because of what's going on in the Middle East and across the board, and all these excuses that the government are going, we're going to get away from all these different types of dirty energy and create alternative energies.
Oh, yeah.
What's going to happen, one thing you can bet on, is higher energy costs from electricity to oil and gas in the long run.
Well, electricity, I'm glad you mentioned that. In British Columbia, at least, we have been sort of forewarned that there are some really serious increases in hydro costs coming over the next couple of years. Is that just something that British Columbians need to be warned of, or is this something that's going to happen to Albertans and people right across the country?
It's not just across the country. It's going to be in America, it's going to be in Japan, it's happening in Germany right now. With the government's trying to go towards cleaner energy costs a lot more than what they call dirty energy, coal and uranium.
Right, yeah.
So these green energies in West Coast and BC, the big one is run of river. Then you got the windmills. These are not economic at the prices of coal or nuclear. The only alternative energy that is economic and comparable to gas, coal, and nuclear is geothermal. But the upfront costs are very expensive. So at the end, the utilities are going to charge higher fees, and that's a hidden inflation coming. So when Obama says by 2035, 80% of America's electricity generation is going to come from clean, green energy, you have to question, at what price can the economy handle? This is something that nobody is talking about.
Right.
People talk about oil. What price will oil break the economy globally? What price will electricity break the global economy?
Well, and I suppose from any person in any kind of business trying to produce something, pretty much the thing that gets it done is electricity. So this is critical to the production of virtually anything anywhere in the world.
Without a doubt. And you look, Japan recently stated that they're going to go away from nuclear. And guess what the solution is? Green energy. It's this great lip service that the politicians have figured out. And all of these politicians are saying these things of green energy is going to be the future. But the costs, they never bring and talk about the costs that the public are going to have to bear and pay for.
Well, you know, and I think it's fair to say that most of us are in favor of saving our environment. We're not hostile people and we have no evil intentions, but we're also not stupid. And we're also not prepared to pay absolutely any cost in order to satisfy some exacting standards. So where's the middle ground here, Marin?
What's going to happen is with more development and research, these green energies will come lower. But governments, not just in BC with the arbitrage between the US and the clean, Canadian green power, but you look at Germany, they've shut down their nuclear power, but guess what they're buying? French nuclear power.
Right.
So they're going to subsidize these very expensive green energy, but yet they're buying French nuclear energy. It makes no sense whatsoever. But what's going to happen with the economy and the free market, the green energies will come more economic.
Of course, yeah.
Such as the geothermals. You'll see a big growth within the next 5 years in the geothermal sector because it's competitive. It works without the government subsidies. Does wind and solar? No. But the technology will come to the point where it will. But to say that 80% of your nation's electricity is going to come from green energy, I don't know how much more of a lie that could possibly be.
Well, we promised you opinions and perhaps even a few bubbles burst along the way. Our guest this week, and we're delighted to have him back, is the energy strategist, chief strategist for the energy division of Casey Research. Marin Katusa is with us again, and we've got lots more ahead. Stay with us.
Always consult your investment professional before making any investment decision.
American Manganese, Inc. has a manganese deposit in Arizona. Indicated 6.7 billion pounds. Inferred 8.9 billion pounds. Potentially the lowest cost producer of electrolytic manganese. American Manganese, Inc. has a projected cash cost of 44 cents a pound. The metal trades near $2 a pound. Do the math. Trading symbol AMY. Visit AmericanManganeseInc.com or phone me, Larry Ray, at 604-531-9639.
You're watching The Money and Wealth Show, archived online at talkdigitalnetwork.com. Here's your host, Sterling Fox.
Welcome back to the Money and Wealth Show. Our special guest this week, the chief strategist for Casey Research's energy division, Marin Katusa, who's also a former calculus professor at Vancouver's Simon Fraser University. The guy knows his numbers. And Marin, the government of Japan, you mentioned this a few moments ago, recently announced that they were going to move away from nuclear. I'm sure to the surprise of no one on planet Earth. We all know why. But then you said then they're going to go to another alternative energy source. But back to the we're moving away from nuclear part, because that ripples back into Canada in the point of uranium, the fuel for all of these nuclear reactors in Japan and everywhere else in the world. If Japan starts this, A, are they starting a snowball trend? And B, more importantly for Canadians and Canadian investors, how's that going to affect our uranium patch?
Well, globally, about 20% of the electricity generated in the developed nations comes from nuclear. It's no secret that it's a dirty electricity conceptually. It's actually a pretty clean energy.
Sure it is.
Okay, and the movement getting away from nuclear started with Germany first, and they're trying to lead the way in Europe, but yet their result was, either the lights are off or we import the electricity at a higher cost from who has excess capacity in the region, the French. Well, 80% of France's electricity generation comes from nuclear.
Exactly.
So you got Germany, who said no to nuclear domestically, but yet where are the French nuclear reactors? Right on the border between France and Germany. Mm-hmm. So you sit there and you go, does this make sense? Then Japan went, And I have a dear relationship with Mitsubishi, and I actually have the utmost respect for the Japanese. I think they're very intelligent people. But what's going to make up the difference? This was a tragedy that happened. There's no doubt about it. But you know, you've got your development. Look at Toyota came out with their earnings saying they're going to be down over 80%.
Yes.
Why? Because they can't produce the material. They don't have the electricity. That's across the board. Is, you know, the reality of all this is, what's America going to do? Just all of a sudden stop 20% of their electricity generation from nuclear and replace it with solar panels and windmills? Well, you would need to cover the whole nation of solar panels to do that. It ain't going to happen. So the reality is...
Despite the fact that there is a very strong component in the American population that believes that's the only way to go.
Exactly. Now you have Warren Buffett and Bill Gates, some of the most successful entrepreneurs in the history of globally in business, saying nuclear is here to stay. You know, Warren Buffett came out and said, we're looking at nuclear as an investment. So the only things that we emphasize at KC Research is grade is king. You want to stay in deposits for uranium where the grade is high. And Canada is blessed with it in the Athabasca Basin, where it's the highest grades globally. You have an infrastructure set up. You have your access to mills. You have actual mining going on.
Sure, yeah.
You don't need to go to Africa or lower grade deposits with no infrastructure. And also, you need major electricity to run these mills. So you need to have an existing infrastructure. And also in the US, remember 2013 is a very important year in the nuclear because of the end of the HEU agreement, where they take the nuclear warheads, downblend them to a lower grade for the nuclear reactors. Well, that ends in 2013, and that was signed 20 years ago when Yeltsin was running Russia, and the agreements were done at much lower costs of uranium. Well, the Americans have to replace that. So either they're going to be paying much higher prices for the uranium from the Russians, or they got to produce somewhere within. So you want existing mines in the US where the infrastructure is built, or grade is king, which we like the Athabasca Basin. And what's ironic about this whole result of the Cold War, in 1992 when this deal was signed, the Americans signed the HEU agreement with Russia. The Russians had the infrastructure to downblend these nuclear warheads into fuel. Today, the Americans do not have the infrastructure to downblend their nuclear warheads into fuel. They would have to send those nuclear warheads to Russia to get downblended. I don't know if that's what the Americans want to do.
Perhaps not, no. But in terms of the Canadian uranium patch and the Athabasca deposit you're talking about, and the future of our investments in same, it's okay. There's no need to panic and run away and abandon your holdings in uranium because Japan last week decided to walk away from further development in their country.
I think a lot of it is also what the society and the social media want to feel good. A lot of this is lip service, and you're going to see Germany turn around. You're going to see, I believe, the Japanese say, okay, hold on a second. We've got to rethink this whole energy balance, because a lot of this is done through emotion. And the reality is going to come, if your society wants to grow and your economy wants to grow, you need a reliable source of power. And the alternative energies outside of the geothermals, they're not primary sources of electricity. You cannot depend on them. You know, the problem with solar is nighttime.
That's right, right.
Okay?
Or if you live on the West Coast, a few clouds every now and then.
Exactly. And the windmills aren't always churning. We just got to look up at the Grouse Mountain and see how that's going.
Sure.
So,
sure.
You know, those aren't primary sources of power. So that's something that these politicians say for lip service, but the reality, nuclear is here to stay. Well,
and again, that segment of the population, the green club, if you will, that's so behind the alternative energy considerations, I think simply lacks, in terms of appealing to a broader base of investors, the ability to convince people it's cost effective.
Yes. The key for all of these politicians to understand that you need a diversified, balanced portfolio of electricity. You're going to need coal, you're going to need natural gas, you're going to need your nuclear blend, and your nice diversity of economic green energy. But then the problem comes in where you have other green parties arguing about, well, they don't want windmills on the coast. Then you got other ones saying, well, we don't want the run-of-river projects diverting some of the river. So there's problems everywhere, and what's going to result of this is higher electricity costs.
One of the fun parts about having Marin Katusa as our guest is Mr. Katusa's travel. He goes all over the world investigating energy possibilities, and is off to the Middle East again in just a very few days. And we'll find out what he's up to right after this break.
The Money and Wealth Show is archived online at talkdigitalnetwork.com.
Mollycore Goldcorp has substantial assets. Magnesium deposit, inferred 52 billion pounds. Molybdenum deposit, indicated 1.9 million tons. Inferred 1.8 million tons at 0.087% MO. Past silver producer, average 182 ounces per ton. Trading symbol, MOR. Website, mollycore.com. Or phone me, Larry Ray, at 604-531-9639.
You're watching The Money and Wealth Show, archived online at talkdigitalnetwork.com. Here's your host, Sterling Fox.
Welcome back to the Money and Wealth Show. Our special guest this week from Casey Research, the chief strategist for the energy division over there, Vancouver's Marin Katusa. Off to the Middle East again, Kuwait last time, Israel, and where else this time?
We're going to be landing through Dubai, then Israel, and I'll be most likely heading to Kuwait and a few other countries. And it's interesting, this is the third trip to the Middle East. The first one was Iraq, to get a feeling of that. And that was a nice shell shock when you walk out of the airport and they ask you to put on a bulletproof vest. And I'm sitting beside Doug Casey going, I didn't sign up for this, you know.
That's
but the reality of the thing is it's not as bad as you would first look on TV and expect. But there are some, you know, when you're surrounded by the French Foreign Legion 24/7, and the main reason we're going to see is not only the social upheaval, what's going on, but, you know, this situation specifically on what is the result of all this change with Israel. You know, it's no secret that Israel has a lot of non-friendly environment surrounding it, and where is its energy source going to be coming from?
Right.
And because a key of this whole revolution is the energy. There's so much money out of this oil, and there's a real change going on. So we're going there to do our research and find any potential opportunities.
Well, now you've been over there enough already, and no doubt will confirm some of your suspicions on this trip too. But there is a revolution underway. We've seen it on our television sets in Tunisia, in Egypt. Syria, pretty ugly scene these days. Not a great country to be upset with the administration in. Bahrain, same kind of situation. Marin, the revolution, the winds of revolution seem to be inescapably sweeping through that entire region. Would you agree?
Without a doubt, and I think this is as big of a change as what's happened in the Cold War and the Iron Curtain falling back in the 80s in Europe. So the change here is significant, and part of what we do is, you know, fortune favors the bold, and you got to take the risk to find the opportunities. So we go there, do the due diligence for our subscribers, and if we find something worthwhile to invest in, you know, we're speculators. There's a big difference. So you have to go there, kick the rocks around, talk to the people, and see if your money deserves to go there.
Is the future supply of Middle East oil, which is so important to both Europe and the United States, is it as secure as some would believe it is, or is it as insecure as others would believe?
I'd have to agree with you that it's very insecure. The real is these are old fields. These have been going on for 50, 60, 70 years, the same vertical wells. Saudi Arabia is a real interesting study that Doug and I are spending a lot of time on, trying to understand as the Guahar deposit has been producing for over 60 years the same way from day one.
Yes.
They're pumping a lot of water in, but they've come out. Saudi Aramco said, we need Canadian technology. We need this shale frac technology to improve our resources. Not only to revitalize older fields, but to find the source rock and the new sources of oil. So that's across the Middle East. So, you know, when you look at all these countries that if they don't invest in new developments and new technology, the deposit depletes. So the Middle East needs to upgrade its service sector.
Are you concerned? We had a chat recently on the radio with Dr. Mark Faber, Dr. Doom in America, who said basically the Middle East is not going to end well. It's going to blow up. Are you as pessimistic about the outcome of all of this a year or more down the road?
I'm worried about it, and I think the balance of power lies with Saudi Arabia. If Saudi Arabia goes the negative way, it's not going to be good for anybody. Most, in fact, influence will be Israel. What will happen to Israel if Saudi Arabia goes away? The Egypt crisis of this late 60s, early 70s, you know, this regime has changed, and it's not friendly to Israel.
Right.
So there's going to be a lot of problems if Saudi Arabia churns negatively. That's why we're going there to find out since December what's going on.
Now, Israel is not a noted oil power. How do they get their energy? And are you? We had some discussion just before we sat down about offshore deposits of some kind. What
Yes.
are they looking for?
So Israel's main source is imported oil from
sure.
non-friendly sources, which is never a good thing to do. And what they're trying to do is explore for unconventional sources or offshore. And there's
This is oil we're talking about.
oil and gas.
Okay.
And the one specific project that we're looking at and doing a lot of research on is a major gas find. So they still have to prove up the resource, and then you got to invest the money to produce the resource. So it's still early days, but we're going there to see what the potential is.
So for investors who are particularly keen on playing on the energy ball field, this could be, if you're a CaseyResearch.com sort of reader, this could be something to keep an eye on in terms of being way out front of the rest of the herd.
That's the key to being a successful investor. You got to be a contrarian.
And are there other spots in the Middle East that would suggest that same kind of attitude would be smart?
Well, I think right now the potential in Egypt, in any area where there's a revolution, a big change, the resources are still there. There are companies that are producing at significant profits, but the market doesn't like risk. So if you have the stomach for risk, there's a lot of potential right now in the Middle East.
And in just a few moments, our guest, Marin Katusa, will have the final word.
The Money and Wealth Show is archived online at talkdigitalnetwork.com.
Looking to advertise to targeted audiences? Online at talkdigitalnetwork.com or howstreet.com. On television, The Money and Wealth Show. And on radio, This Week in Money. To learn more about getting your message in front of our audiences, email us info@howstreet.com or call us 604-699-8600.
You're watching The Money and Wealth Show, archived online at talkdigitalnetwork.com. Here's your host, Sterling Fox.
And now with the final word on today's show, our special guest, Marin Katusa.
On the last show, we talked about the importance of investing in solid people. Today, I'd like to emphasize on the political risks right now in the undeveloped world. You're going to see potential major risks in the Middle East. You look at South America. There are many regimes that want to nationalize the deposits that have been developed by the publicly traded companies on the Canadian exchange. Be very careful that you have taken a Casey-free ride and reduced your financial risk, and also being well aware of where your money is. There's a lot of risk in the market today.
Marin, it's good to see you. We appreciate your taking the time and stopping off from your globetrotting long enough for us to capture you for a half an hour on the Money and Wealth Show.
Oh, it's a pleasure with you, Sterling.
It's good to have you come in. And our thanks also to Fritz and the crew here at Churchill's at the Holiday Inn in North Vancouver for the exceptional hospitality. For the Money and Wealth Show, I'm Sterling Fox. See you next time.
The Money and Wealth Show has been brought to you by AmericanManganeseInc.com.